Ladies and gentlemen, good day to you anywhere you're listening. My name is Yemi Olaleye. I'm a global financial market analyst, and this week we're going into the markets with full energy. And happy new month to you because we're in new month of March. And let's see what the market brings us as opportunity in the global financial market. And last month was fantastic. And few of the opportunities that we saw in the market were enormous at the same time, we were able to take part of them. And for this month, let's go with that great energy and see what the market brings to us. From the fundamental outlook, as usual, when we check from the forexfactory.com, we look at the market from the perspective of this week in the fundamental regard from the March 3rd till March 7th, 2025. And from 3rd of March 2025, which is Monday, we look at the US dollar coming up with a high impact news on ISM manufacturing PMI, 4 p.m. Nigerian time. On Tuesday, we have the JPY coming. That is the BOJ governor, UEDA, when he's going to speak. Then we have the match of 5th. We have the 5th of March, 2025 on Wednesday. We have the 1:30 news around the AUD. The GDP quarter by quarter news will be released 1:30 a.m. Nigerian time. We have the 8:30 a.m. from the Swiss franc, 2:15 for the US dollar, which is the ADP non-farm employment change, and 4 p.m. for the US dollar again for the ISM services PMI. On Thursday, we have another fantastic opportunity on euro and US dollar, which most of the high impact news for this day is to the euro. And we have the euro all day. We have euro 2:15 p.m. coming up with the main refinancing rate monetary policy statement. US dollar news is coming up 2:30 p.m. Nigerian time on the employment claims, and 2:45 p.m. Euro is coming up with the ECB press conference. All of these are impact news are expected to move and to be volatile in the market. On the 7th of March, Friday, which is the last trading day of the week, we have some impact news, which we have about 6 of them. From the CAD to US dollar, from 2:30 p.m. Nigerian time to 6:30 p.m. Nigerian time, ranging from the CAD on employment change, unemployment rate, average hourly earnings, and to the US dollar 2:30 p.m. Nigerian time, one of the most anticipating fundamental, which is the non-farm payroll, is coming up on this same day. And as well, we're wrapping up the week with the Federal Chair Powell when he speaks by 6:30 p.m. Nigerian time. This day is going to be very, very volatile, and we believe that you're going to trade with caution in the market. Straight, let's move up into what we have from the regards and the technical analysis, starting from the DXY. From the monthly time frame, we walk through the weekly, the daily, 4 hours, then we move to the next currency pair of choice. All right, starting with the DXY. The DXY has a lot to do with what we're going to do with EURUSD, GBPUSD, and USD pairs for this week. So let's check that. On the monthly outlook for the DXY, what have we seen so far? We've seen that it was bearish for the month of February, and what does that mean? When we look at this from perspective whereby we have three long consecutive bullish candlesticks in this month, and January happened to be a doji after grabbing some level of liquidity, then last month was February. It showed us to be a bearish momentum with some wicks. Actually, rejected that week to this price level at 107.139. Then what does that behold to us as traders on the lower time frame? Let's see that. When we go into the weekly time frame, of course, weekly time frame is a lower time frame to monthly time frame. I hope you get that. When we look at that on the monthly time frame, let me show something very clearly. You saw that we had a doji candlestick right here on this level. And what was the next thing we saw in the market was that level was taken out by the monthly candlestick of the February. That level was swept in the market. Can you see that? Now, market is closing above it. What does that mean? Going to the weekly time frame analysis, let's further see more insight on that. Now, this is that same level. We saw how the market move above it and close above it. Now, which means the liquidity that was grabbed below this price range, because most of the February movement on DXY was used to cover the gap. There was a huge gap in the month of February that the market covered. Now, the market has closed above this price level here. Then what do we expect for the week to come? So ideally, we would be expecting more bullish momentum because this candlestick signifies more bullish momentum after a level of liquidity has been grabbed in that same range. Where is it? Right here. Can you see that on weekly time frame? This level has also been swept with liquidity and ended as a bullish candlestick, which of course closed above this high level right here. So what are we going to do with that theory? Therefore, we'll be looking forward to see more bullish momentum on DXY. Then let's go to the weekly time frame. Let's see how that will likely work. We trade with what we see in the market, not what we feel. Of course. Now, looking at this, let me take out this level. Let's work with the range we had already. How this range was swept out in the market. Now we're on daily time frame. So let's bring it to that concept of daily time frame. Okay, this is it here. Now we have a daily time frame here. And the next thing is we've seen the market, how it broke through this level here. We've seen the market starting a new formation of higher highs and higher lows here. Then the next thing is we had an opportunity to see the market clearly with an imbalanced level on this daily time frame, which is here. What does that mean? It means that we can expect the market to actually still go bullish, but just before then, it won't be bad if we see the markets coming back into this range before going bullish. That's the ideal thing. So basically, this is the imbalance on the daily time frame level that we had here. Then looking at that, definitely we're going to look forward to when the market is going to sweep this level right here. Okay. The market, we look at the market on this internal range for the market to sweep this level. From there, we'll know what next to do, either to keep buying or to keep selling the XY. So this is the outlook on the month, the daily time frame. Checking the week, the 4-hour time frame, there's no much difference. Can you see that? If you remember how the paradigm is being played every single time in the market, you're going to understand that this is also a level which was a sweep at a point in time. And the last 4 of the market that formed last week was actually about breaking that high and forming a strong bullish candlestick above it. So right here, all we can expect is to see a little bit of momentum into this range like this before we see the buy. But I won't go with this basically because I'm looking at higher time frame perspective. But if you're looking in for a quick way to just cash out $1 or $2 from the market, this is not a bad idea. Whereby you can wait for the market to come into a range like this, of course, because this is also a liquidity level. All right, but I won't be looking at that. I'll be looking at what I've seen on the higher time frame. This will be my focus. Okay, that is on the DXY for this week. Let's check out what we have on Euro US dollar. From there, we move to Great Britain pounds, US dollar. And looking at this from the perspective of the monthly time frame on EURUSD, we saw that the market has actually created some level of bearish momentum within the past month. And the month of January created a perfect doji candlestick formation pattern. And when we had the monthly candle on the February, it showed that this level is protected and the market has not been able to break above this same level. And can you see that? And what level is that? At 1.0543. Now the market has actually formed a bullish candlestick to that level and it's rejected immediately till 1.0373, which is the current market price for the closing of the market for last week. Now, what do we have for this week, therefore? Let's go to the lower time frame, which is the weekly in this perspective, and see what we have. On the weekly time frame, therefore, we saw that the market is actually ranging. All through last week, we talked about this, like we're expecting more bearish momentum, and we even had a level we're going to buy from if the market break a sweep above, but the market didn't. So we expected the sale, of course. Now, the market has actually sold for last week, and when you look at that, this has been a ranging market within this price level. So what are we expecting? A little bit of sell before we have the buy, or we're expecting a little bit of buy before we have the sell. Of course, we may look for the market to come back to a price range like this for a buy. Can you see that? Something like this before it continues to sell off. All right, at least to this level. Something like this on weekly time frame. But then let's further break this down. Let's go to the daily time frame. Let's see the opportunity we have on the daily time frame. Now, on the daily time frame, the perspective is a bit clearer because now we saw where the market's rejected from. Can you see that? So basically, let me just bring that back on. So we saw a price level like this in the market when the market took that responsibility of selling from the Wednesday of last week. And what candlestick formation was that? That was bearish and rally. So bearish and rally candlestick with a mighty candlestick on a bearish direction on Thursday, breaking the previous low level right there. And now we had a Friday candlestick continue with a stronger bearish momentum. And this leaves us only with one analysis right here, is to seek the opportunity to see more bearish momentum after a little bit of buying momentum. And where would that happen? Most especially, we need to look at where liquidity resides. And we can see one of that on that daily imbalance zone, which is here, right here. So, which means on this week, for this week rather, we're waiting for the market to come into this price range like this, and we can sell from here. So ideally, when market opens, and if market is not creating a gap, we're expecting a little bit of 70 pips on average into this range before we see a sell opportunity. I would be selling when the market comes into this range. Okay, it looks good for a sell, but I'll wait for the market to go into that range before I sell it up. And that is on the daily time frame. Let's further look what we have on the week, on the 4-hour time frame. Of course, since it's 4 hours, it has to be refined. And on 4-hour time frame, that means I can reduce my risk and I can manage it better, right? So I can do something like this on 4-hour time frame. I can look for a price level like this. This makes it a little bit better for me. I can actually know more precisely where I'm looking for the market to come to. And this will be on the 4-hour time frame. This is the H4, this is the H4 right here. Okay. This is the H4 time frame. This is what I'll be expecting from this market to do for this week on H4 analysis. However, if you're a swing trader, you know what to do. If you're a day trader, you know what to do. Swing traders, we go to the higher time frame and you use that as your bias. And of course, if you're a intraday trader, you can look at the 4 hours and you can blend it in a way. So long it's profitable, it's fine. Okay, this is the outlook for me on the Euro US dollar for the monthly, for the weekly, and for the daily and 4-hour time frame, most importantly. So basically, this is that. And of course, if I'll be selling from here, this level must be taken out in the market for me. This level must be taken out in the market. All right. If I'm selling from that zone, so that will be how many pips in total? Let's check that. I'm coming. That will be about 138 pips, which is something practical. The market can do that in a week. All right. Going to the other currency pair of choice. This is the Great Britain pounds US dollar. And let's go to the monthly time frame. We've actually waited for this market. It did everything we analyzed last week. I hope you know. This actually moved the same way we've analyzed it last week. So let's see what we have for this week. As I do say, we don't reside on past glory. And looking at this, it's a bit opposite of what we've seen on Euro US dollar. If we are expecting a more buying momentum on the DXY, then we should be expecting Euro USD to sell and Great Britain pounds US dollar to sell. But what we've seen on the Euro USD was a sell, and what we've seen on Great Britain pounds US dollar is the opposite. It's looking buy. Of course, it's looking buy. So for the month of October, November, December, January, they've been bearish in the market. And of course, they took out a little some levels we anticipated. But the month of February, which was last month, chose to be bullish for Great Britain pounds US dollar. And we know that. So the market on the monthly now shows more bullish momentum for us on that Great Britain pounds US dollar. And looking at this from another perspective, we add some quite interesting price levels we should be looking at for that month, where we have the opportunity to see markets moving into before it will sell. But how long will it take to get there? I can't tell. Looking at this, for example, from this price level to this price level, this is an imbalanced level in the market. And looking at that from this perspective, we have about 250 pips on average to get there. This is a monthly perspective, though. But then let's go to the lower time frame to further see more levels where we can anticipate movement. On the weekly time frame, looking at what we have on Great Britain pounds US dollar, the previous month or the previous week was really, really chubby in a way. We do not have much going on with the Great Britain pounds US dollar. And looking at this again, from this perspective, we've seen how the market has left this level untapped. And this is actually a liquidity zone in the market. And with that, therefore, we can see that the last three candlesticks also took out the previous week high, which was here. If you're seeing it, this level right here, it took it out and closed below it, which makes this level to also be looking bearish in the market as it stands now. This is also looking bearish in the market. So basically, we just want to see more opportunities on where we should forge on which direction should we forge on for the week on Great Britain pounds US dollar. This is not looking too exciting for me if I'm looking at this from this perspective, but based on what I'm seeing in the market, of course, this looks a bit good. And let's look at this. Let's look at this. I'm just saying that this is not looking with big potential for move. It's not one of the A-list, so to say. This is not getting in my A-list for this week. Great Britain pounds US dollar. It's not making it to the A-list. It's not making it to the most prioritized pairs for the week for me. All right. So looking at this, therefore, guys, what we've seen here, I'm going to take this out. Sorry. I'm going to take this out. All right. So what we've seen here, following the candlestick range, you can see that this level in the market has actually been taken out. It has been swept. right here. Can you see this level? That's been swept because we had this as the last candle before we had all of that, before the high was taken out right here and the rest of that. Okay, now this level has been taken out. We have the bearish candle momentum. We have another one to sweep this level and closing above it. So which means that we are looking forward to see more buy, even though we're going to expect more sell. All of this level looking at here, let me show you this level coming. I'm coming. I just want to write, I want to show it. This level here is filled with liquidity. So it means market is expected to come in there. Sooner or later, market is expected to come in there. So on this daily time frame, therefore, let me take this out, sorry. I'm coming. So on this daily time frame, it means that there is an imbalance right there where we can expect the market to come into in the nearest days, right here. So this level has been taken out for a bullish momentum. So it means we're expecting more buy. And where will the buy be? I'll be looking at where we have the liquidity at this price level. So which means I'm expecting the market to buy about 50 pips on average into this range before the market will start selling. So which means this is what I'm expecting from this market before it gets into this range. Now, by the time the market gets into this range, I would know what else to do. But first, I'll be selling from that price level. And into this range will give me an average of 100 pips, which is still reasonable for me. And this is on this is on Great Britain pounds US dollar. This is on Great Britain pounds US dollar. And that is it. Okay, coming to the 4-hour time frame, let's see what we have on the 4-hour time frame. If it's looking the same, and of course, this is looking the same. Basically, for us supposed to give us an opportunity to refine a strategy. The previous high level, the previous low level we have here, which was at this price level, we've seen rejection right there. We've seen how the markets rated through that level, close below it. We've seen how the markets move, sweep this level, close within it. And that is what ranging looks like on a lower time frame. So with this, therefore, I'll be going with what I've seen on the higher time frame analysis, which is the daily. So basically, waiting for the Monday candlestick to form, we give more insight about what to do and what next step to take in the market for this week. But ideally, we can expect that to happen, seeing a buy opportunity on the market on Great Britain pounds US dollar, which is about 50 pips in total, then expecting a sell of about 120 on 100 pips on average back into this daily imbalance range. And this is the outlook on Great Britain pounds US dollar for this week. Let's go to the guy AUD US dollar. This guy has been fantastic. So it's been falling at the same time because this guy moves in a different way entirely somehow. And let's see what we have. So last month was more of a bullish candle with a lot of rejection for the monthly time frame on AUD US dollar. And actually, it went into a price range we anticipated before now, which is the monthly time frame level for the imbalance. If you remember that, I think in one of our analysis, we talked about it. This same level was in the monthly imbalance level. And that structure has been there. We analyzed this, I think, some weeks ago. And looking at the monthly time frame on AUD US dollar, it went straight in there to fill that level. And with that now, does that mean we should be looking forward to sell after leaving that level? We return into a rejected price level and close at 0.62094 for last week. And then let's go to the lower time frame and see what opportunities we have on AUD US dollar. On weekly time frame, this remains a strong sell opportunity and momentum. Looking at it from this perspective, looking at what we had for the last week did about a total of 162 pips on average in the market. So looking at that, what do we expect to see from AUD US dollar in this coming week? More sell opportunity. That's just it. More sell opportunity. As a matter of fact, we'll be expecting this level to be taken out this week in the market. Depends on the fundamental that is coming, but ideally, with this outlook, we should be expecting at least 130 pips or 100 pips on average on AUD US dollar for this week if we are jumping on a sell. So that leads us to go to the lower time frame of the weekly, which is the daily. And looking at the daily time frame, this looks good. And of course, we also have a price level here, which we're expecting the market to. We can use this place as a level where we can target the theory of candlestick formations. Okay. Now the market has rejected this price level, just like what the market has shown before. This is a bearish Abrami, and from there the market started pushing lower. The lower price level here was taken out completely in the market, where we had the throwdown on the bearish momentum for the last week. And then with this, we have an opportunity in the market to see an imbalance level that's formed between the Wednesday and the Friday momentum, which leaves us with one outlook to look for a buy before we sell off this guy. So the buy now will give us about 60 to 65 pips on average before we see a sell momentum. And when we're going to sell this, we should be expecting at least 150 pips in the market on the daily outlook for this week. All right, that being said, going to the 4-hour time frame on AUD/USD, let's see what else we have in there. Are supposed to give us more opportunity to refine, and it depends on how you're really refining it. Okay, looking at this perspective, therefore, look at this. This has been a massive bearish momentum, massive bearish momentum, massive bearish momentum, with little less opportunity to see fair value gap level or imbalance level that we can trade into. But ideally, with 4-hour time frame, we can still spot one on this 4-hour time frame for AUD/USD, which is right here. So which means you can look at what the market did here. The market came to a price level like this, which is also an important zone right here. It's also an important zone. The market came into a price level like this. And when the market did, it created armor and finished the last, that was the last 4-hour traded candle for last week. Finished with what? With bullish momentum. Ideally, you will be looking at an imbalance level here, but I'm not going to use it because this is still at the floor of the market right here. So I won't be considering that. You will want to consider this. Yes, that's nice, but I'll be considering this because this looks a bit better with what I've seen on the higher time frame. And don't forget, higher time frame shows you exactly what the market looks like on a on a bigger picture perspective. So for that reason, this is what I'll be doing. All right, this is what exactly I'll be doing. Looking at that perspective, therefore, on 4-hour time frame AUD/USD, I'll be expecting the market to do a bit of buy of this into this range, which will give about 70 pips on average into that range before I see a buy or I see a sell momentum. On the other hand, if you think that that 70 pips will be too much for you, you can also still look at the market to take a shot at that opportunity right here to sell from here. That is still very, very good. It's just about you knowing that you're waiting for the market to do this. All right. So you can wait for the market to actually still come to a price level like this for you, because this is also a liquidity zone. But then this would be the entry point 1 and this would be the entry point 2. Depends on the kind of trader you are, will determine which of these zones you'll be taking your sell momentum or your sell entry rather. And going to the USD card, no, I did that last week. I will check USDCHF now. Before then, let me check gold. Let's go to gold. In fact, let's go to the USDCHF, USDJPY. I think sometimes I check USDCHF, USDCHF, and USD CAD. Okay, on the monthly time frame for the USDJPY, we saw a buy momentum the last time we checked this. All right, so let's check on the monthly time frame. This has been showing us some momentum into the selling direction for last month, because last month was a complete bearish momentum on USDJPY. But looking at the bigger picture right here, what do you think? Is this cycle completed yet? Are you thinking or are you saying the market doing something like this? Okay, if this is what you're saying, well, I think our view aligns and I'll be breaking this down a little bit more. Okay, this is USDJPY, and let's see further opportunities in this market. So on the monthly time frame, this looks bullish, but last month was bearish. So how do we explain the bullish for this month? Basically, on what we've seen in the market, we've seen the market actually created a failure swing right there. We've seen how the market has moved into this price range here. I would have ordinarily I would have expected the market to come into a range like this before we see a buy momentum. And of course, the market did something similar to that, because within this price range here, the market has found its way into that imbalance range and it has tapped away right there. Look at this. So it has tapped away from this level and it closed at 150.609 for the last week. So with this outlook, therefore, it means by the weekly monthly candlestick opening for this month, we're going to have an insight on where we should be heading on USDJPY. And let's go to the weekly time frame outlook and see more momentum or more insights on the momentum that we've discovered. Now, the market has actually tapped into this range, as we said, and it closed with bullish momentum for last week, which was here. Now, ideally, when the market closes at a level like this, we would be respecting a little bit of retracement, then a buy continuation, because at this level, it's showing a tendency of retracement or reversal rather. It's showing a more tendency of reversal. Right here, we're stuck within this price zone based on candlestick formation pattern and the theory we're looking at. So we can expect a bit of sell of this market into the premium price range. But let's explain that further on the daily time frame. On the daily time frame, looking at this, we've talked about how this level acted as a strong level for us to find a liquidity into the bullish direction. And we can take that out, of course, and we can leave it. There's not too much on the chart. Looking at these candlesticks, we have a lot of them ranging. They ranged actually for more than a week right here. But the more we saw the market hit this same low pricing, it started moving into the higher highs and higher lows in the market. The last 3 days moved higher highs and higher lows, higher highs and higher lows. And currently the market's rest here is residing here. So basically what I'll be looking at now is how I'm going to see more bullish momentum on USDJPY. What does that mean? If the market opens for this new week and the candlestick opens right here without a gap, then it will be a good time for me to spot a bullish imbalance right here, whereby I can expect the market to come into this range and then move like this. At least I have this high. I have this level. I have this level in targets, in view. I'm expecting the market to still come into a price level like this, into this range for this week. And that is about 400 pips. So if the market is unable to do this in a week, then it can do this in 2 or 3. But definitely, I'll be expecting the market to still take out this high. And from that, so current market price is about 200 pips. And this is what the market can actually do. In fact, this whole level can be taken out in this same week. All right, this is on USDJPY monthly time frame. But that is when the market opens with another candle. But otherwise, this is still if this is still a forecast, we're expecting the market to open. Then when it opens, it gives an opportunity to retrace a little bit, and then we have more bullish momentum. Looking at this level here, it looks clean, right? But last daily candle for the last week traded into it, and then we experienced this little bit of sell momentum. So ideally, what we're looking at is, I'm just trying to rephrase. I'm coming. I'm just trying to rephrase that. Looking at this, it means I'm looking for how the market will find its way somehow into this range. All right, into this range, back into this range at worst. Then the first level is here, which we may have some. Can you see that? Then the next level is here, and this is also in our target. On our target. So basically, this is the outlook on USDJPY. And looking at this on the 4-hour time frame, let's further break it down. On 4-hour time frame, we only have more insight. And looking at what the market has done here, it has broken above it, clear all the previous high levels here. The internal range is cleared. Then we're looking at the market creating something like this. All we can do, anticipate, is to wait for the market to hit this level at bearish minimum, and then we can wait for the market to do this. So what I've done on the higher time frame perspective remains valid for this time frame, remains valid for this to play out as well. So this is the outlook on USDJPY. And going back to the gold, which will be the last that we'll be checking out today. Let's see. Gold has been on a massive bullish momentum without a thought of thinking of jumping on the other side of the market, because that would be very, very brutal and bloody. And of course, in the market, last week we expected a bit of sell. Then we analyzed that, but we are saying the market is still much more of bullish momentum. I remember I said that multiple times last week. So currently, this is the last month's candle ended after breaking the all-time high at 2,952.36 or 2,957.36. The market has actually traded down into a price range and closed at 2857.94. So does that mean the market is going to do more bearish momentum? Because we even had an opportunity to see this. So we have an imbalance level right here where the market can actually still come into. What the market can do about 1,200 pips into before we see more bullish momentum. But ideally, let's go to the weekly time frame analysis as well. Let's see what we have in there. So after the series of 1, 2, 3, 4, 5, 6, about 7 to 9 weeks candle in the bullish direction, last week candle ended as a bearish one, which closed as a bearish engulfing candlestick formation pattern and closed below 2 bullish candlesticks of the previous weeks. And that means something to us. So now what we have in there is to see an opportunity. One, the first thing is the level we're looking at on gold last week that the market traded into. The market actually traded into it. That was the fair value gap, the imbalance level at this level. The market has done a threshold of that, which is the half of that range, as you can see it here. So the market has done this on gold. And anytime we have something like this, it pulled out again, showing us more of bullish momentum. But how long will this bullish move be? How long will it be? Should we be expecting gold to move like this for this week? We're going to see that on a lower time frame. Okay, we're going to see this on a lower time frame. So basically, a little bit of imbalance is also residing here. So that's why I stopped the arrow there, in case you're wondering. Can you see that? Can you see this? Okay. So basically, let's look at the lower time frame perspective. Let's further look what the market may likely do. Okay, on the daily time frame for gold, gold has been choppy and lays us on with unclear signals. So we're trying to be careful as much as possible. So basically, from where gold is now on daily time frame, we had an imbalance above the price level. Where is that exactly? This zone here, we're looking at this zone, is an imbalance zone for us. So peradventure, if market is going to buy on gold or we want to sell more on gold, I would rather wait for the market to come in. As a matter of fact, I won't trade this for this week. It's not looking too good for me because I want something more clearer on gold. All right, I'm waiting for the market to go into this range for this week before I can spot a sell momentum, before I can sell this market. And if I'm going to be selling it, I will be looking at this level or looking at this level. But most importantly, on the daily time frame, with what I'm looking at here, I'll be looking at this level to take out whatever I've made from this market. And if that should be possible, if that should be the case, then that is about 1,000 pips. Gold can deliver this for sure. We all know that. But then this is what I'm looking at on the daily time frame for gold. I'm seeing more of a buy momentum before the sell. Let's go to the 4-hour time frame. And because of the week, I may still come out to show you one or two things on all these currency pairs again. Not certain, but I may do that. On the 4-hour time frame, it's looking a little bit the same because right here, we've seen how this low was taken out in the market. So let's break it down. We see how this low was taken out in the market for this 4-hour time frame, isn't it? So now when this happened, we had an imbalance structure too. I don't know if you're saying that or I'm not sure about it. No, we had it. We had an imbalance level. After that level was taken out, this was the imbalance that we had right there. So which means if you're looking for a quick intraday opportunity, you can wait for gold to buy into this range before you sell off. But then I'll be waiting more for gold to get here based on what I've seen on the higher time frame perspective. Ideally, that is what I will be doing on gold if I would be trading gold for this week. Regardless, this is just a forecast. We expect the market to move in that perspective. If the market is not getting to any price point, which I expect to buy or to sell from, I'll remain where I am. I'll sit on my hands because I'm not going to trade without a clarification. I'm not going to trade without a confirmation. Don't forget, as forex traders, confirmation comes before execution. I wish you all the best and do have a wonderful trading week ahead of you. And bye for now. See you again next week. God bless you.